Good morning everybody, this is Lara from Pure Elliott Wave with your daily update for Bitcoin, Ethereum and XRP. Before we get into it, if you're not subscribed here, I recommend you do so, hit the subscribe button because you don't want to lose my channel. I'm covering these three markets Monday to Friday. I'll update it on the weekend if something big happens as well. I've got 15 years experience, over 10 of which now as a chartered market technician, so you're getting all of that for free Monday to Friday, so don't lose the channel. If you are subscribed, thank you very much for your support. I really do appreciate it, and please hit the like button and make a comment because your engagement helps. Bitcoin may be forming a little pennant pattern. It's getting pretty old now though, 22 days in duration from the start. I count this as the first candlestick. The best performing flags and pennants complete within 15 sessions. So this is now a bit old. The probability of a good outcome is now reducing. If we see a break above about 44,110, then a target from the pennant calculated from the flagpole would be 53,190. Support at 41,100 is still holding. If that were to break through, I would expect strong support and not much more movement below 38,500 if at all. So far, let's expect support at 41,100 is likely to continue to hold. Flags and pennants are continuation patterns, so the breakout from this pattern is expected to be upward. Yesterday's session completed with a red candlestick and a little bit of a push from volume. Although the session was upward with a higher high and a higher low, I looked inside the session at hourly volume bars yesterday and determined that volume was more dominant on downward periods, so I'll read that as bearish, but overall as price moves sideways in the pennant, volume is declining. That's pretty typical of consolidations. There was a strong bullish signal from on-balance volume on the 20th of December, which supports the view of an upward breakout from that pennant. There's a new little consolidation here, and on-balance volume is just broken below this new support line I've just drawn. It's got three anchor points or three tests of the support line, but it's got quite a steep slope. It's somewhat long held though, so there's a weak bearish signal today from on-balance volume, but the last bullish signal still in play was actually quite strong. I'll give more weight to this bullish signal than this bearish signal. I'm still expecting an upward breakout from the pennant is most likely. Even if it doesn't turn out to be a pennant, just some kind of consolidation, a rectangle or something, I'm still expecting an upward breakout is most likely, mostly because of this bullish signal from on-balance volume. ADX continues to decline, getting quite close to a low level now. The duration of this consolidation has been able to pull it right down from extreme down into normal territory. Using that model of stochastics plus support and resistance, when there's no clear trend, we'd expect a downward swing to continue until price hits support, maybe at the lower edge of the pennant, and stochastics reaches around about the 50 mark, because that's recently where it showed us where downward swings were ending. Someone's asked me to expand on the idea of using divergence between price and RSI to identify trend changes, particularly double and triple. I'm adding in money flow as well, and I'm using that in conjunction with RSI, because sometimes RSI won't show you divergence where money flow will, because money flow is a little bit more sensitive. It has a volume component to its calculation, so it adds a little bit more depth to this process. Well, first of all, I explained in a recent video that you have to wait for the pivots in price. A pivot in price, when it's in an upward trend, is a green candlestick moving price higher, followed by at least two red candlesticks or dojis, something to form a little peak in price. And then you look at a corresponding peak formed in RSI. Here's a peak, here's a peak, here's a peak. When you see the pivot in price and a corresponding peak in RSI, then you identify your divergence. You look at price on a closing basis from this point to this point. Price closed higher, RSI was lower. That's bearish divergence. You've only got single bearish divergence here, so it's a warning of a potential trend change coming up, but it's not as loud and clear as double divergence or triple divergence. Once you get to this point here, and this is the 5th of December, we see another pivot form in price, we see another peak in RSI. We can identify divergence. Price is closed even higher, and yet RSI remains still lower than this previous peak and lower than this peak. So now we've got two lower peaks. We've got double bearish divergence. At this point now you've got double divergence. The warning is louder and clearer. You have to exert more caution. This can develop to triple or even quadruple. Every time you see added divergence, the warning is louder and clearer. Unfortunately, it's only approximate in terms of timing, looking for that trend change. Now we get that final triple, and when these peaks are closer together, on a multiple bearish divergence toward the end of it, I see that as an even stronger warning. In my experience, when you get these last two peaks quite close together, that's often the final gasp, so look for that one. But use it in conjunction with ADX. ADX will reach very extreme, and then as RSI starts to exhibit your divergence, ADX, you could almost consider this divergence. It tells us the trend is still extreme, very extreme, but not as extreme as it was previously. So it's telling us again, along with RSI, that there's some weakness here at that high. And so when you start to see this look with ADX plus that multiple bearish divergence with RSI, compare it to price on a closing basis, you start to get really loud warnings of a potential trend change. Put it in conjunction with your Elliott Wave count. Now you're going to have an idea as to what size the trend change is going to be. If your Elliott Wave count's only looking for a low degree second or fourth wave, you might just be looking at a little consolidation or a brief pullback. But if your Elliott Wave count is coming to the end of a big primary degree wave, you're looking at a bigger divergence. For the larger degrees, you also want to look at your divergence at higher time frames as well as daily. Here, I'm just looking at the daily. Another question someone asked was about targets for Ethereum. I want to show you how I'm calculating it. I'm basically just using past price behavior. This is the entire price history of Ethereum, and from this low to this high, I'm counting a really clean 5-wave impulse. Primary 1, a beautiful looking impulse with great proportion. Primary 2, a double zigzag, a 74% reduction of primary 1, so a big bear market. Primary 3 was 19.36 times the length of primary 1. Primary 4, a triangle, and primary 5 was 81.51 longer than 2.618 the length of primary 3. Now 19.36 is not a Fibonacci ratio. I'm just noting how long these third waves are in relation to the first waves. We've also got some more data in here. We can see that within primary 1 we've got an impulse 1, 2, 3, 4, 5, and intermediate wave 3 was 15.32 times the length of intermediate 1. Using two big previous impulses, we've got a couple of big third waves. We can look at how long they are in relation to their first waves and extrapolate forward from that data. And so extrapolating forward from those two numbers, 15.32 and 19.36, for primary 3, we could get a potential range of 73,672 to 96,571. This is not a target. This is just a general idea of what is possible for this market based on its past behavior. It's done it before, so we have to acknowledge it could do something similar again. 11.09 is therefore more conservative. 11.09 is an extreme Fibonacci ratio. Now, this would be an extreme number to use for a target for a normal market, but not for cryptocurrencies, because the volatility of these markets is extremely high. So we use higher Fibonacci ratios. And so 11.09 is an extreme Fibonacci ratio, but it's not as high as 15.32 or 19.36. But let's consider, what if primary 3 did exhibit an extreme Fibonacci ratio to primary 1? Our target would be 54,226. Going to the daily chart, the low down here of -2 is this point down here. So I'm using 11.09 to see if -3 is 11.09 times the length of -1, 13,325 would be where it could end. You don't have to agree with me, but you must acknowledge that this is based on past data. And that's all we really have to go on. At this point in the wave count, you've just seen me go through the monthly and weekly, we're in a cycle degree third wave, primary degree third wave, intermediate degree third wave, now minor and minute, a third wave at 5 big degrees. The strong upward pull could have forced minute 2 to be more brief and shallow. Quickly, technicals for Ethereum. We had a little flag pattern, a breakout with push from volume. Wasn't able to break above resistance at 2,400. Today coming back down to test support at this upper trend line for the flag. Normal behavior, I'll expect next touch of resistance at 2,400. I'm going to expect an upward breakout above that imminently for Ethereum if this flag pattern is going to hold and be predictive. The target is 2,738. Support 2,100 continues to hold. It was previously very strongly tested resistance. I will expect 2,100 is most likely to hold for Ethereum at this time. Yesterday's downward session testing support That flag pattern has pushed from volume. Today, much weaker volume, but it's still just before midday, so a few hours to go. At this stage now, Ethereum's ADX is telling us it is in an upward trend in a relatively early stage. This is not the strongest signal ADX can give. That's when it rises from below both DX lines and from a low level below 15. It's rising from above 15 and it didn't get below both DX lines, but it's still a pretty good signal. This is bullish for Ethereum. It tells us there's an upward trend. We should expect that trend to most likely continue. RSI is neutral. There's a long way to go before it gets as overbought as it can get for this market when it has a bullish trend. Money flow is also neutral, so there's a long way to go before the trend gets extreme and conditions reach overbought. My Elliott Wave count for XRP expects an expanded flat is most likely unfolding for miner 2. I've zoomed in on the structure to show you the detail. Expanded flat subdivide 3, 3, 5, and the B wave of an expanded flat must retrace a minimum 90% the length of A. For this one, that's at 0.73119. When B has reached that minimum or above, then C is expected to move below the end of A. When I know the length of B, I can know what type of flat is unfolding, and so use the ratio between A and C to calculate a target for C for you. I can't do that yet. All I can say is it would be expected to move at least slightly below A to avoid a truncation. Truncations are really rare. I'm adding some structure to my minute B here. It too is unfolding a flat as an expanded flat, 3, 3, 5, and minuet wave B is just over 105% the length of A, so the type of flat is an expanded flat. That means we expect C to move reasonably beyond the end of A, so reasonably above 0.7003. So 0.373119 or above is expected, and then a downward swing. Someone's asked me, is it possible we could have a downward swing first and then the upward movement? Let's have a look and see what other structure could possibly be unfolding for miner wave 2. Let's try the simplest and most common, a zigzag. Could be A, B, C. For a zigzag, A must subdivide as a 5. This one obviously can't be an impulse because of the overlapping, so let's try a diagonal. 3 is shorter than 1, 5 is shorter than 3, 4 is shorter than 2 if the trend lines converge. So 5, 3, 5, a zigzag for B, so we've got a 5-wave structure for A, a 3-wave structure for B. We need a 5-wave structure down now for C, and this is the problem I see with this wave count, and this is why I discarded it a while ago. Minute wave C within the zigzag must subdivide as a 5-wave structure. It's a little bit problematic trying to see minuet 1 over here. It looks like a nice 5, 1, 2, 3, 4, 5. But then minuet 2 doesn't subdivide very well at all as a corrective structure. You can see minuet wave 1 over here, but now you have to see 3, 4, and 5 to continue lower. The problem is the duration of minuet wave 2. It just doesn't look right. It'll fit. It's a valid wave count. I am aware of it, but I just don't like the proportion of minuet 2. It's taken too long now. For XRP, a descending triangle may be in play. We'll look for support at this trend line, which is about 58 cents, resistance at the sloping down trend line. Descending triangles, about 63–64% of them break out downward. Upward breakouts are more profitable than downward though. In this case, I expect an upward breakout is more likely because this support at 58 cents is really strong and holding. If it does break below that, 55 cents is even stronger. I wouldn't expect XRP to move below that point, so the downward target for the triangle at 45 cents looks far too low. The upward target, however, looks about right. We need to wait for a break above resistance or below support to know the next direction for the trend, because triangles are either continuation or reversal patterns. An upward breakout must have push from volume in order for confidence. We don't have a breakout yet. You've got to be patient with these triangles. They do take their time. Yesterday completed an upward session with a high high and a higher low, a doji. Upward movement yesterday did have some push from volume, so I'm going to read the volume profile for XRP is bullish, and there's a bullish signal yesterday from on balance volume. This trend line has 3 tests. It's somewhat long held, but it's got a reasonable slope, so it's not a particularly strong signal, but it is a bullish signal. It's not that weak actually, it's kind of medium. ADX is now below 15. It's below both DX lines. It's coming up from a low level and rising. If the black ADX line can reach 15, it will tell us there's a new trend, and that will be the strongest signal ADX can give. This is really exciting look for XRP. At the moment though, ADX is below 15, so there's no clear trend. That's it from me today with your analysis of these three. I hope you're all having a lovely day.